में कहीं बाकी थोड़ी सी है जिंदगी, कुछ ऐसी चुभन इस लम्हे में है, वो लम्हा कहाँ था मेरा, अब सामने इसे छू लो जरा, इन्वेस्ट करो और जी लो जरा।
Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting video which is about how to earn stable income in an unstable market. I'm sure the emotions that I went through in the pre-bumper, you could very well correlate with me, right? What happened in the last 2-3 months or a little bit more than that, when your portfolio was surely in maybe double-digit green and then it shrunk to maybe a single-digit green and then maybe to red color. So if you want to know how to earn stable income in such an unstable market, how can be a right way to diversify your portfolio, then keep on watching the video till the end. Well, now going ahead with one of the ways to invest in a security which can fetch you a stable income, the example is bonds. Now, to understand what are bonds in a very simple way, let me take a very quick example. Okay, assume there is this organization. It could be a normal company or it could be a government, whatever. Okay, but this wants to raise money. Now, assume that the owners of this company feel that in the coming few years they may gain supernormal profits, and that is the reason why they want to raise money without diluting the equity or without diluting the ownership of the company. That is why they tell the investors that we will not make you the owners of the company, but you can lend us money and in return we will pay you a fixed rate of interest. The payout can be monthly or quarterly or annually, whatever. Okay, now what happened in this example, understand. For the investors, was it a good situation? Yes, because comparatively with lower risk, they got an assured return. And what was good for the company? The best part for the company was that they got the money without diluting the equity. And this is nothing but issuing bonds by the company to the investors. So if I were to tell you the definition of that, here is the definition for you. Bonds are debt securities issued by the corporations, governments, and other organizations to raise money from the investors. I hope you have got this very well, but if you want, you can check out this video wherein I have explained about what are bonds in much more detail. Well, now that you have understood what are bonds, now let's try and understand why should you invest in bonds. The very first reason that we have already discussed is volatile stock markets. Let's go on to the second reason. The second one is a fixed stream of income. Now, what do we mean by that? See, whenever we invest in bonds, the bond document will very clearly mention about the payout of interest. In some bonds, there can be a monthly payout. In some bonds, it could be a quarterly payout. It could be a half yearly, a yearly payout, or it could be also a bullet payment, that is one payment at the maturity of the bond. So I feel that is a good way of streamlining a fixed stream of income. The third one is rising inflation. I'm sure everyone knows about what levels of inflation India has reached right now. It's almost at a high of last 3 or 4 years. And if you want to beat inflation, you need something which gives returns which are higher than the rate of inflation. The current rate of inflation is around 7%, and that is the reason why I'm talking about bonds, which typically fetch between somewhere around 9 to 11% returns. The next one can be higher returns than what? Than FD, but of course a shade lower returns than stock market. Now, what do I mean by that? So if there is an investor who believes that I'm interested in fixed stream of income, so that person can surely go and invest in fixed deposits. But then, fixed deposits, the rates of return are pretty low. I agree that the risk is also low, but see, look at the return. So that person feels, why not invest in some other instrument which fetches me a high return? Animation team, control your emotions. This is better. So here you can understand that if you invest in stock market, of course the returns are high, but it will come with comparatively higher risk as well. Then what can be a good midway solution which is fetching us returns which are higher than FDs but a little bit lower than stock markets? Why not? So here you can understand that the risk is also a shade higher than FD. but definitely lower than stock markets. Point is clear, right? Moving on to the next one. The next one is diversification. So, as always, like I say, never put all your eggs in one basket. Investing in equity is good, but you should not be putting 100% of your money in equity, nor should you be putting 100% of your money in FDs. It should be a mix of fixed deposits, RDs, bonds, equity, real estate, crypto, a little bit maybe, depending on your choice, right? So it should be a good diversification. The next one is parking of funds for short term. Now, what do we mean by that? There are some bonds which will have a maturity of even 12 months. Some may have a maturity of 18 months. Some may have a maturity of 24 months, whatever, so on and so forth. So if your goal is to get money in a shorter term, you need that assurance of getting back your money, a fixed sum of money, then investing in bonds which have a comparatively lower maturity makes sense. And the final point, why should you invest in bonds, is for a good goal planning. Now, if I were to tell you about goal-based planning, that will take some more minutes. So let's discuss that in the next part of the video. And let's start our example with the help of Mr. Chandu and Mr. Bandhu. And today is 1st of April 2000. Both have decided that they want to save for their child's higher education, and both of them want money on 1st of April 2020. Fair enough? Because it's a long-term goal, both decide that we will invest our money in index mutual fund, and both decide to invest in some Nifty 50 index fund, right? So they start their equity investing journey, very disciplined manner. They're investing every single month. Their portfolio, you can see, is surely increasing, but of course their portfolio is also going through some dents. It's stock market, right? So thoda kabhi khushi, kabhi gum is going to happen through the journey. But now we are here at 2018, and now let's understand what happens in 2018. Okay, so Chandu says, now I'm going to focus more on preserving wealth rather than creating wealth. And Mr. Bandhu says, ye dil mange more. I want to still continue my investment in equity. What Chandu does is, Chandu shifts his portfolio from equity to bonds. Now, if he shifts from equity mutual fund to bonds, then what is going to happen? He's now going to get a steady income somewhere between 9 to 11%, and that is where he meets his goal in the year 2020. Now let's understand what happens to Mr. Bandhu. Bandhu still keeps on investing in that equity mutual funds and crash at the last moment. In March 2020, everyone know what happened. And you can now imagine 20 years of disciplined investing, and at the last moment, mati khalli. So if you want to avoid that, you should choose bonds or any other fixed income investment if you are very closer to your goal. So I hope you have understood the thumb rule of investing. If the goal is far off, you can invest in equity, but as you go closer to the goal, you should ideally shift your portfolio from equity to debt instruments. All right, so let's move ahead. Okay.
What if their goal matures in 2021?
Oh, so that's a very good question, right? That instead of 2020, had their goal matured in 2021, then what? Because I'm sure everyone knows that after 2020 fall, there was a V-shaped recovery. And in that case, it would have been possible that Bandhu could have gained much more than Mr. Chandu. But please understand, the whole thought process of shifting your portfolio from equity or equity-oriented mutual funds to bonds, as and how we go closer to the goal, why is that necessary? Because at that stage, creation of wealth is not given that much importance. Preserving of wealth is given a higher importance. So I hope your question has been answered.
Yes, ma'am.
Yes, okay, cool. So with that, now let us move on. First, I'll read your mind now. Then the next question now will be that, if I were to invest in bonds, then what could be a good platform to do that? Am I right?
Correct, ma'am.
Anyways, okay, so when I searched about various platforms through which you can invest in bonds, one of the good platforms that I came across was the platform named Golden Pie. So Golden Pie is a transparent marketplace where it has a very good user-friendly interface, and it has a very simple process of investing in various types of bonds, ranging from reputed bank bonds, NBFC bonds, PSU bonds, corporate bonds, and a lot more. And I believe that the confidence in such entities grows to the next level if big investors have also invested in such platforms like Golden Pie. which is one of the key investors. Zerodha, which is one of the leading brokers, has invested in Golden Pi. In fact, they also have a strategic partnership with Axis Direct, Bajaj Finance, and a few more. So let me take you to Golden Pi website, and if I scroll down here, you can see that you can invest in bond IPOs online in just 5 minutes. So if I click here, then I just scroll down, and as an example, let me talk about Muthoot Finance Limited's bond IPO. Now if I want to dig down deep, I can see what is the minimum investment amount which is required. That's just 10,000 rupees. That's amazing, right? Plus you can earn interest up to 8% per annum. Of course, this is definitely higher than bank FDs. It mentions it's almost 2.6% higher than bank FDs. Plus the rating is also pretty decent enough. It is AA. Plus the issue closes on 17th June 2022. But if I want more details on that, I just click on view series. Now assume that I want a yearly payout and I'm interested in comparatively shorter time frame. I don't want to go ahead with 84 months or 60 months. So I want to get more details on this 36 months, that is series 3 issue. So I just click on series 3. Then I get more details, something like what is the minimum investment, how much is the tenure, how much is the yield, that is 7.5% in this case. Then is it going to be listed? Answer is again very much yes. You can also see that the instrument is taxable, but more on taxability of issues, we are going to discuss that in the coming part of the video. Well, if you want to dig down much deeper, you can also download the prospectus right away. Plus, you can see here that the credit ratings is AA. It means ICRA says that it is a stable credit rating. Plus, if you want, you can check more like debt quality, the highlights. In fact, you can also check the details of the issuer, in this case, Muthoot Finance Limited. Here, the point that I mentioned that yes, it is definitely higher than bank deposit is also quantified in a better way. Well, if you want to check the cash flows, you can see that on the right hand side, that first it will be your minimum investment that will go on your investment date. If you scroll down a little bit, then you can see June 2023, you'll get your first interest, June 24 second interest, and finally June 2025, there'll be a maturity of your face value will also get back plus the interest amount. So with this, if you feel that okay, I'm fine with this 10,000, chalo, it's a new type of investment avenue, let me test the waters with only 10,000 rupees, absolutely fine. You just click on I apply for IPO. Then you can scroll down, just ensure that okay, series 3 here. If you want, you can also increase units, but I am going to stick to only 10 units, 10,000 rupees. So again, you can scroll down, just fill in your details, name, email ID, mobile number, then click on continue. After that, enter your PAN details, DMAT provider, just select that, enter your 16-digit client ID number. Then for payment, you will have to type your UPI ID and then hit on apply IPO. Ta-da! It says your IPO application has been successfully submitted, and if you want, you can also go to IPO orders, and here you can see that our IPO order has been updated. Now that you have understood how to invest in bond IPOs, now let's try and focus on how to select bonds. So for that, I'm taking you to this tab, which is Discover Bonds. I think they have an amazing sorting feature and a filtering feature as well. I'll just quickly sort the bonds for you. So based on my thought process, based on my requirement. Now assume my requirement is that I want to invest a very small amount in bonds and I want to know what is the minimum amount that I can invest with. So for that, what will I do? Investment, but from low to high. So if I click here, I'll get to see all these bonds which have a minimum most investment, 10,000, 10,000. Then of course I just go on with 20,000 and a few more. Okay. Assume that my purpose is safety and I want to go from highest safety bonds. I want to choose that. So I click on safety, high to low. So here you can see highest safety is with REC 54 EC bond. So that's basically a tax saver bond, but yield is only 5%. Of course, low risk, low return, right? One last example, assume that I want to invest in a bond which has a very small tenure. So I click tenure, low to high. So here I get to see about India Bulls Housing Finance Bond. Yield is 8.44 and the maturity is just 19th March 2023. So less than a year. So based on my requirement, I can sort the bonds. Next amazing filter feature is that you can also filter the bonds based on multiple parameters, like what is your investment purpose. It could be like, let us say I want to invest for a short term. Okay, see, you can see immediately this is getting updated on a real-time basis. Then assume that I want balanced safety, that can be AA. Then assume I want yield somewhere 8 to 11%. Okay, and much more. See, there are so many more parameters plus filters, but assume only based on these three, I get a short listing of these two bonds, and then I can select which one I want to invest in. One more amazing feature is about collections. So here I just know that, okay, I want to invest in, let us say, okay, I am a senior citizen, assume, okay, and I want to understand that which bonds could be good for senior citizens. They have a very easy shortcut ready made for you. Click on bonds for senior citizens. So basically, they will try to see that here you can see CRISIL A plus bonds are in this entire list. So they have not only helped us to create filters to sort the data, but they have also given us a list of bonds based on a specific theme. Now let's try and focus on taxation of bonds. So if I'm talking about taxation, I have to first divide the bonds into two types, whether listed or unlisted. Again, listed will be further divided into short term, long term, and same unlisted will also be divided into short term and long term. But then the question is, how do I define a short term bond or a long term bond? If it is listed, then the holding period will be only 12 months to be qualified as a short term. So if I'm holding it up to 12 months, it will be short term. If I'm holding it for more than 12 months, it will be long term. This is for what? Listed. Now instead of 12 months, if I replace it with 36 months, that will be the criteria for unlisted bonds. In simple words, if I'm holding an unlisted bonds for up to 36 months, then it is a short term. For more than 36 months, it will be long term. Simple. Now, in both cases, whether it's a listed bond or an unlisted bond, for short term, the taxation will be as per your applicable slab rates. So, if you're into the 10% slab, you'll be taxed at 10%. If you're into the 30% slab, you'll be taxed at 30%. Simple. But if I'm talking about long-term gains or long-term bond, for a listed bond, you will be taxed at flat 10%, but you will not get the indexation benefit. And if I'm talking about unlisted bonds, and if it is a long-term bond, you will be taxed at flat 20%. Again, you will not get any indexation benefit. Well, now that you have understood anything and everything about investing in bonds, then please don't forget to check out the link in the description box to start your investing journey in bonds. If you have loved this video, if you have found some knowledge in this video, don't forget to share it with your friends and with your family members. And if you want to know more about investing in IPOs, but equity IPOs, you can click here. And if you want to know more about yields or YTF, you can click here. Till then, take care. Jai Hind and bye-bye.